Carter, surprise news story of the year.
I'd have to go with the launch of TTP on that one.
We like to create our own dramatic news.
So crazy to see that we've managed to get to 56,000 monthly readers in that time.
But my favorite law, and I remember this, I think it was on the 18th of February.
Of course, we saw in ASEAN, the Digital Economy Framework Agreement came into place.
Well, we've managed to get this far, 18 minutes or so, without mentioning private credit.
When you look at treasurers in 2025, they're really facing a lot of pressure, both internally within their own organizations, but also externally.
You may have celebrated a different day, the big bang of the 20.0022 ISO 20.0022 weekend, 22nd to the 23rd of November. I was celebrating that for sure.
Welcome to Trade Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance.
Good morning, good afternoon, good evening. My name is Deepesh Patel, Editor-in-Chief and Managing Director of Trade Treasury Payments, joining you this New Year's Eve from Bogota, Colombia.
And I'm Carter Hoffman, Trade and Technology Editor at TTP, joining you from Toronto.
Happy New Year's Eve. So how do you normally spend your New Year's?
I think for me, New Year's depends on who's around, but typically you get a group of people together, whether it's friends or family. We'll almost always put the Dick Clark New Year's countdown on the TV in New York and watch the ball drop, have a few drinks. What about you? What do you normally do?
Well, normally I don't watch the ball drop because I don't normally make it until 5 a.m. in London. But maybe this year that's something we'll do because we are in the same time zone. And I guess to all of you people listening in, I don't know what you're doing listening in. You should be spending time with your loved ones. But hey, what a year it's been. What an exciting year of innovation, of downright fraud, lots and lots of things happening in trade, treasury and payments. It's definitely kept the editorial team busy. Okay, so we're going to talk about the predictions for 2026. But really, this is also going to be our roundup of 2025. What were the big themes that drove liquidity and risk management? But let's warm up. Carter, I prepared some questions for you, and I need you to very quickly prepare answers for a quick fire round, okay?
All right, let's do it.
Deal. Let's do it. Cats or dogs?
Both.
One or the other, please. Okay, next question. Favorite trip of the year?
For me, it was the one to Johannesburg in South Africa, mainly because after the conference was over, I got to go on a 3-day safari, which was my first time ever doing one of those. So that was really cool.
Very cool. And you managed to shoot a photograph of the top 5, right?
I did, yeah. Managed to see all the big 5. Got pictures of all of them. So that was really cool. Had all the camera equipment down with me, so got some pretty good shots.
Using company equipment wisely. Best project you worked on?
I think for sure for me, the favorite one that I worked on was working as the editor on the World Trade Organization's World Trade Report, which this year we looked at AI in trade and the impact that's going to have. So it was cool working on that for a few months and then finally seeing it published and officially released. So that was probably my favorite.
And it was a really good paper, not just generically talking about how artificial intelligence could change trade, but actually looked at the value chain of artificial intelligence, which goes into a lot more detail. And that's pretty much the reason why trade volumes grew in 2025, according to the WTO. Because if you take the boost that AI gave out of the equation, then trading goods and trading services would be in a slump, right?
Yeah, you'll have to go and read the full report, find out for yourself. But yeah, that's basically the high level overview there, is that a lot of that impact came from AI.
Carter, surprise news story of the year?
Well, I think I'd have to go with the launch of TTP on that one. I don't think a lot of people in the space necessarily saw that one coming, but definitely an exciting one. Exciting one for us there.
We like to create our own dramatic news. And it was in the House of Lords, which was quite fun.
It's true, on your birthday as well.
Best birthday ever. Why don't you do a quick round, quick fire on me?
There you go. Yeah, I've got a few questions set up and ready to go here. So we'll start off. Your favorite party from 2025?
Well, the year hasn't ended yet. That's not really too fair because you talked about your favorite party. I'm going to agree with you on the spirit of enjoyable events. I really enjoyed our boat party, the TTP boat party in Frankfurt. That was pretty fun. I had a big gang of people on the boat, and I remember sending my mum a WhatsApp saying, "Hey mum, we've made it. Here's our boat." She didn't believe we'd bought a boat, so yeah, but it was good fun. We danced lots.
It was, yeah, there was a lot of dancing at that party. I remember that. Next one, your favorite law that you ran into in 2025?
Gosh, you really are challenging me on these, right? Favorite law. Okay, well, look, I'm not a lawyer, but my favorite law, and I remember this I think it was on the 18th of February, where the Guiding and Establishing National Innovation for the US Stablecoins Act came into law by Trump. And that was the first federal framework for regulating stablecoins, the Genius Act. And that's actually what it stands for, not just that it was a clever act, although I do think it was clever, but fascinating. Introduced into the Senate in February, signed into law in July. It created a regulatory framework, essentially the stablecoins payment framework. What's really interesting here is it requires issuers of stablecoins to maintain US dollar reserves or your US T-bills, treasury bills, as secretaries. I think it's something we don't really talk about enough, and we need to talk about more because the dollarization, the power of the dollar in this act is significant, and given the growing market capitalization of stable coins, it's definitely something we need to watch out for.
Yeah, I agree. No, definitely a good law coming out of it, and a good acronym there in the title, which leads me to my next question, which is your favorite acronym that you heard in 2025?
My favorite acronym. Well, my favorite acronym is an acronym of an acronym. And I don't think I've laughed so much recording this with Pamela Marr at the ICC DSIR editorial board member and Oswald Kaler at the Asian Development Bank. It's the KIGS, KIGS, which stands for the KTDDE implementation guidelines, and KTDDE stands for Key Trade Documents and Data Elements. So there we go, an acronym of an acronym within trade documents, the implementation of those. But guys, stop the crazy acronyms. It's too much.
So many acronyms. I guess next quick fire question. What was your weirdest work encounter of 2025?
Well, I'm going to mirror you here on the safari front. I was in Namibia in Windhoek at the Commonwealth Ministers' Trade meeting with half a day spare. I think the water had run out and the heating was off. And believe it or not, it was quite cold in Namibia at this time. And I booked a taxi to go on a safari tour. 5 minutes before, the driver called me and said, "Can someone else join you from the hotel?" I was like, "Sure." And lo and behold, the legendary Emmanuel Gann at the World Trade Organization joined us, and it was fantastic. We were having jokes around the various broken promises of digital trade technologies, reminiscing on 7 years of writing publications and researching this with Emmanuel on everything from blockchain to frontier technologies to technology as a tool to increase access to finance, whilst being threateningly stared at by an ostrich, which we had to scoot around. So a good start of the conference. We made it out alive.
There you go. Well, on that note, should we move on and talk about some of the main milestones that we hit at TTP and over the past year, our first year existing?
Yeah, so Carter, give us a bit of an overview. What were the key numbers for TTP?
Looking at things, and again, you have to remember in April when we launched at the House of Lords, all of these numbers were at zero. So crazy to see that we've managed to get to 56,000 monthly readers in that time. And we're getting 500,000 content impressions every month. So 500,000 there, pretty crazy to see. 108,000 LinkedIn impressions per month. Over 1 million annual social media impressions. Over 40,000 page views in 2025. Again, over 100,000 engagement events, and some pretty good other metrics on that side as well, looking at some of the user metrics on the site. So I guess throwing it back to you then, do you want to talk through some of the content and the volume and I guess sort of the editorial side of things that you've seen in 2025?
What's been exciting for us is there's been a lot of talk about within transaction banking, liquidity, risk management, payments, and treasury. It's not just the volume of our content, but also the high volume of content. I think we've averaged about 120 pieces per month. That's across pulses, news, articles, and multimedia. And you really led the huge platform development of Treasury Payments, which means that readers can access us in such an easy way, which I think is incredibly important for telling narratives to our readers. And as I've always said, not all content is the same, and to be able to launch the new TTP front end and back end was pretty exciting, and also being able to ensure that we're really careful about how we attribute content, whether it's paid, whether it's sponsored, partnered, or purely editorially driven, and also attribute who's an editor, who's a host, who's a sub editor, who's a reporter. I think that's really important, and also a huge help from our global advisory panel, our GAP, on advising us on the UI and UX from a reader perspective. But yeah, we did hundreds of interviews, 97 physical video interviews in just 9 months. I don't know whether between the two of us who spent more on a plane, but I guess you can work on a plane these days, right? So let's talk about the key themes then. 2025, we have 5 key themes. The first one is around tariffs. Explain.
Obviously, you can't talk about 2025 without talking about tariffs. I feel last year at this time, the only people that would have been talking about it was niche news organizations like us that are focusing on industries, specifically with trade. But now it's something you're seeing mainstream. Everyone's talking about it, especially since the Trump administration came into power. We had the Liberation Day tariffs on that front. Just some stats that I've run into looking at this. So the World Bank actually reported in the first 10 months of 2025, there was 2,500 additional trade restrictions that were imposed around the world. So a massive number there, and really tying back into a lot of that global fragmentation that we're starting to see, and some of those blocks that are coming up and different trading patterns and whatnot. And we're really starting to see a lot of shifts in the ways that goods are moving across borders, both because of some of those trade restrictions and because of those tariffs as well, as I said, that we're seeing. So again, like we released a report earlier in the year on connector nations and how a lot of those are cropping up, certain countries trying to get around some of those tariffs and trade restrictions to still get their goods from A to B. But on that note, we've also seen a lot of work from various countries in the world on free trade agreements that have come up, or different multilateral agreements in that sense. Of course, we saw in ASEAN, the Digital Economy Framework Agreement came into place. The UK and India, as well as UK and Korea, both updated the free trade agreements there. India and Oman with their SEPA agreement. FIT partnerships with some of those rule-based mid-sized economies coming out of Switzerland. We've seen a lot of those developments there. So I think for sure on the trade side, we've seen a lot of developments, a lot of good news coming out of those free trade agreements, but certainly a lot of fragmentation as well and shifting trade flows. And there's definitely a lot of businesses out there, especially small businesses, that are still dealing with some of those impacts of the tariffs and the ramifications that come with those and the added complexity that comes with that down the line. And I think that's something that we're going to continue to see definitely into 2026 and likely for the rest of the decade as well.
Yeah, it's a weird reflection. I remember seeing the jaw-dropping moments of the liberation images of Trump holding that tariff screen. Perhaps we've been somewhat desensitized. It's driven a bit of a block in my mind. I guess the same kind of thing with the implementation of trading blocks to do with deals that one another enable. You see these bilateral trade agreements in blocks or between countries. We've seen the increase of digital economy framework agreements in various markets, particularly in ASEAN, all around the world. Yet the tariffs were really impactful. I think when you were on the ground in Johannesburg, you spoke to a small chocolate exporter. I'm actually going to have some chocolate whilst we're talking, but that's been increasingly impacted by trade tariffs, right?
Yeah, so there was one, I remember the one small business, and it was the SME ministerial in Johannesburg. So a big focus on small businesses, particularly from a trade context. And I remember it was interesting. The one trader that I was talking to, he was running a chocolate manufacturing company. But one of the things that he said the tariffs had the impact on their business was one of the ingredients in one of the recipes for their chocolate bars got hit with a rather significant tariff, which colossally increased their cost for that bar. So what they actually had to do is they had to go and find a different substitute for that, or for that particular ingredient, which led to them effectively changing that entire recipe of that product that they were selling. So again, a lot of times when we talk about tariffs, we think of it more as the macro trade flows, things getting more expensive, but we don't necessarily think about how tariffs coming in can actually change the products that we have day to day, because for the people that are manufacturing them, it might be far more expensive for them now to produce it using, the same methods or the same components that they had before. So they have to change that up entirely. So you might, as a result of some of these tariffs coming in, some of these global implications that we're talking about, end up with completely different products that you're buying than you did a year ago or 2 years ago. So really interesting to see how on that kind of granular anecdotal level, those impacts, they really do trickle down.
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it.
So on that note, why don't we move on and talk about the second main theme that we noticed from the year. So I know we have it written down in our notes here. We have liquidity engineering. So Deepesh, do you want to talk through what you see on that side?
Well, we've managed to get this far, 18 minutes or so, without mentioning private credit. Suffice to say, 2025 has been a bit of a calamity for fraud within trade and supply chain finance, receivables and credit. I'm not going to go into too many details on every single fraud case, but I guess the massive financing scam uncovered, and it's still hitting the headlines today, is First Brands Group, the major US auto parts supplier, maker of Fram filters, to those of you who might not have heard of First Brand Groups. They filed for bankruptcy in September 2025 amid revelations of a large-scale trade finance fraud. And just to give an idea of the scale of the fraud, the initial bankruptcy filing showed $11 billion in debt and financing obligations, including $6.1 billion on-balance sheet debt and $2.3 billion in off-balance sheet financing. Of that, a small amount, $800 million in supply chain finance and $2.3 billion in factoring liabilities. But much of this financing is now suspected to be backed by non-existent or doctored invoices, double pledged inventory, capital, and hundreds of millions, if not billions of dollars are alleged to have been siphoned out of the firm between 2018 and 2025. More recently, in November, the First Brands court-appointed managers accused the founder and longtime CEO Patrick James of orchestrating the scheme, who's even more recently now gone back and blamed the lenders. But what's important here is this fallout's had far-reaching implications on the trade, finance, and private credit market. You're seeing numerous financiers facing losses or frozen claims, notably the non-bank lender Raystone, which relied on First Brands for 80% of its revenue and found that those expected receivables vanished. Yeah, I don't know what I would do if I was in that situation. But what's really important, the way we've been reporting on it at Treasury Payments, is really, really trying to be clear on what payables or supply chain finances and buyer-led payables finance really is, what those definitions are according to bodies like the Global Supply Chain Finance Forum, what's in scope and what is just downright fraud. Another big fraud closer to home has been unpacking of the Trafigura versus Pratik Gupta, the nickel commodities fraud, $600 million. It was quite newsworthy. It was quite a sophisticated base metals fraud where high-grade nickel cargoes from companies did not contain nickel at all. In fact, much lower value materials. And I think over the course of the dealings, $3.2 billion of transactions occurred, and Trafigura had to write down somewhere between $577 and $600 million after uncovering the sham. And that's currently going through high court trials with the judgment expected or due in early 2026. So we look forward to that. Then there's the fake telecom invoices scam. You may have heard of telecom entrepreneur Bankim Brambat, which included Carriox Capital, Broadband Telecom, and Bridge Voice, which is part of the Bankai Group. And here we see a brazen receivables finance fraud, which hit other big lenders, and it involved fabricating invoices and contracts with major telecom operators. Some of you may have heard of T-Mobile, AT&T, Telstra, Bix, and those fictitious receivables were used as collateral to borrow huge sums of money. And I think the fraud was known to be much more elaborate than this, including creating fake websites, domains, email accounts to impersonate and fool auditors and lenders. So lots has happened. Treasury was a trade finance fintech fraud via a SPAC for $60 million. Treasury was a Singapore-founded trade finance fintech company. I've reported on it before. The company Kratos, a blockchain-based platform. And in November, so very recently, the US Securities and Exchange Commission, SEC, charged Treasury's founder and CEO, Srinivas Kannera, who I have interviewed in the past, alleging he fabricated that platform activity and misled investors. Lots to unpack, lots to take in. And I think what's really important here, what is real supply chain finance? What's a fraud? And I think what's really important here is making sure that you really know who your end customer is. And I think, if I'm honest, we probably don't talk enough about our end customer and the person that's ultimately impacted by a lot of what's going on in the market, the difficulties, the frauds, etc. But actually, and I think leading on to our next theme, it's really around the corporate treasurer, understanding the corporate treasurer, because at the end of the day, they're the ones that look after the business that our market participants, our readers ultimately serve. There are lots of things keeping them up at night. So Carter, what's keeping the corporate treasurer up at night, and what's our next theme?
I think when you look at treasurers in 2025, they're really facing a lot of pressure, both internally within their own organizations, but also externally from some of those macro pressures that we're seeing in the market. So I think the first one there that we'll mention, just volatility, right? Again, a lot of those external pressures. You're seeing a lot of things like foreign exchange rate shifts, supply chain disruptions. These are coming in and impacting the way that treasurers have to go and deal with a lot of their day-to-day operations and whatnot. But at the same time, you also have a lot of that credibility pressure coming from within the organizations themselves. A lot of pressure coming in on performance and controls and making sure that these treasurers are able to deliver some of that core value to the organizations that they're serving. And it's interesting too, obviously, we talk a lot about technology and some of the impact that technology is going to have on improving a lot of the process, is going to make things better for everyone, is the technology narrative that we hear all the time. To achieve that, to run towards that, we see a lot of organizations trying to put in some of these technology systems. And as I'm sure a lot of people know, a lot of those systems can be, quite big, quite complex implementations that we're running through. And it's really interesting when you look specifically at treasury management system implementations in 2025, between 30 and 40% of them, according to the one statistic that we have here, just failed, those implementations, right? We're not talking just like cost overruns or budget overruns or whatnot. We're talking just outright failures on those implementations, which obviously has a big implication in terms of, again, some of that internal pressure. If you're seeing some of those efforts to streamline things and to make them more digital not panning out as you initially saw, you're going to see some of those treasurers pivot to different areas, different efforts. But again, we're also seeing, like I said, a lot of those external shifts as well. So seeing a lot of the policy rate changes. So the UK-US policy rate, for example, coming in at around 4% versus 2% in the Eurozone, branding out by the end of 2025. But we're also seeing on the AI side, again, back to tech, a lot of that AI hype that we've seen over the last several years, we're starting to see that kind of draw to a close, and a lot of people believing that experimentation phase with AI on the treasury side is coming to an end, and we're going to start to see a lot more of those practical projects being able to move forward. So I think, at the end of the day, really those two main pressures on the treasury side coming externally and internally, and driving some of those key trends that we've seen across 2025. So on that note, why don't we move on, talk about the fourth theme, which, we have here, payments and cash management. So you want to walk through that a little bit?
Sure, and I guess for those of you who are still tuned into our podcast on New Year's Eve, perhaps you may have celebrated a different day, the big bang of the 2022 ISO 20022 weekend, 22nd to the 23rd of November. I was celebrating that for sure. But Swift completed the CBPR Plus transition from ISO messages, where all cross-border payments and reporting flows moved to ISO 20022 as that single standard, and those legacy messaging types, MTs, were no longer supported by CBPR. And I guess that's one of the biggest projects that's really happened from a transaction banking and project management payments perspective. And in the context of ISO 20022, it's all about richer data, structured fields, better transparency. It was a real test point for big banks, small banks, and it probably shows that data controls and processes really needed to be paid attention to. The good news is we didn't see too many failures. Nothing stops overnight. Most banks stayed live over the weekend. The core payment rails didn't fail. Big tick, congratulations to the industry for a successful migration. I guess let's move on to the final theme, Carter, because we will be here till midnight otherwise, or maybe even midnight London. Carter, what's the final theme from your side?
Again, if we're talking about themes that we saw in 2025, again, mentioned tariffs earlier, obviously a big one. On the tech side, you have to talk about AI. It's been the elephant in nearly every room that has come up on that side. So again, I think one of the big things that we're starting to see is that mainstream adoption of AI. So up until now, it felt a lot of times like companies have been talking about it, but not necessarily implementing it and seeing those impacts coming through. But I really think now we're starting to see that come in. We're starting to see things again. Agentic AI has been one of the big talking points this year, especially. So we've seen, again, just looking at some of the numbers there, PwC came out with a report. AI adoption in 2023 was sitting at about 14%, whereas this year it's up to about 74% in terms of organizations that are active with AI or expanding their adoption. But one of the things that I've noticed too, and especially as that space has matured and we're starting to see some real applications come in, is that the rhetoric around it has almost shifted a little bit from almost that dream state idea of more of like a technology wish list, what everyone's hoping that a new technology is going to come in and achieve all of these fantastic milestones. And it's more shifting to almost a bit of a practical angle on that conversation. So again, with that WTO, the World Trade Report that I mentioned earlier, one of the main findings from that was how there's a lot of gaps that are emerging in AI adoption. So, and in a couple different ways as well. So in high income countries, for example, about 2/3 of firms are adopting it. So about 66% there, versus in lower and middle income countries, that's down at about 27%. So a big gap between the rich world and the more developing world in terms of AI adoption, but also in different sectors as well. So manufacturing sector is only at about 22%, whereas finance and insurance, those are up above 50% at 52% on that one. So you're seeing that divide as well between sectors. And what you're hearing from a lot of organizations, from people in the space, and some of those more mainstream conversations now, is looking at those practical ways to bridge those gaps to make sure that they don't continue to amplify as we move forward and implement more and more AI. So like I said, shifting more. In the past, it's been almost that dreamy, AI is going to come in and solve all of these problems, to more of a, hey, it's coming in, it's having these real impacts, but we still need to be able to manage it properly and make sure that everything's rolled out so that nobody winds up getting left behind with some of those gaps that are coming in. Yeah, so stablecoins, the next one there. And again, I feel like we've heard a lot more about stablecoins this year. We were talking about them a lot probably 5 or 6 years ago when a lot of the blockchain hype was coming out. We heard that quite a bit. But this year, the stablecoin market, it seems to be coming back. So the market cap, of course, is up about 51% year to date in 2025 on the stablecoin side. But a lot of people would argue that a lot of the activity that you're seeing there is still more kind of the crypto native side of things, or maybe more the liquidity management side of everything there, rather than impacts coming in on, almost the real economy, so to speak. Organizations using stablecoins to pay their suppliers instead of wires. So I think, what we're seeing, especially in 2025, has been a growing of that space, more conversations coming in around it, but also seeing a lot of organizations treating it less as a fad and more as that long-term infrastructure, but something that is going to need to continue to grow and develop in the years ahead before it becomes much more mainstream. And again, like closely tied to stablecoins is the idea there of CBDCs, so central bank digital currencies. So again, just to put some numbers on that, 137 jurisdictions are currently exploring CBDCs, according to a report that I found. So that covers about 98% of global GDP. And it's up a little bit from 2023. It was only at 130 then. So 7 more organizations. So you're seeing more and more of these companies exploring it and getting into it. And of that, 72 of them claim to be in advanced phases of that experimentation with CBDCs. So I think going forward, we're going to start to see more and more of those coming into the market and more of that adoption long-term from that more government-backed central bank kind of digital currencies. So I think those are the 3 main tech themes that we're running into, being AI, of course, top of mind for everyone, and the nuanced shifts in there, but also stablecoins and CBDCs and how those have increased a lot over the course of the year, but are still perhaps not quite there from a full 100% implementation standpoint. But that we're going to start to see that increase more and more as we move forward.
Wow, well, what a year it's been. And I think from a reporting perspective and looking into lessons learned as we move into 2026, I think the core themes around the world moving towards a fragmented trading system where tariffs really are front of mind, they've caused liquidity challenges. And I think with regards to trust, as I termed in one article, we need to be able to verify receivables, collateral, balance sheet financing, and platform metrics. That's really important there. Pulling on that theme, what I think will happen in 2026 is verification will move out of the back office and into the form of it will be a key decision maker in financing eligibility, pricing, distribution, regulatory comfort. And I think we'll see more registry-based controls. We'll probably see mandatory obligor confirmation layers. We'll see audit trails that are machine readable, not just a PDF-based audit trail. Verification will become embedded, not just bolted on. And I guess that when it comes to providing capital, they will increasingly ask the capital providers, can you prove this? Can you prove this structure works? Not just, can you provide the structure? And I think that's really important for trade finance distribution, private credit, reinsurance. I think verification will become a product in its own right in 2026. I guess, Carter, from your perspective, where do you think the predictions will lie from a Treasury perspective?
On the Treasury side, like I was talking about there a little bit earlier, I think we're going to start to see Treasury credibility becoming a lot more of a board level priority in a lot of these organizations, really focusing in on actual delivery of some of these impacts rather than just perhaps a vision. So again, like I said, we saw 30 to 40% failure rates in some of those Treasury tech implementations. I think we're going to start to see the boards coming in and being less interested in the roadmap to get there and more interested in putting in some of those controls to make sure that these outcomes that we're putting in actually come into place and actually materialize and function properly. Because I think we're going to start to see maybe fewer platforms, but better implementation on that side as some of these treasurers come in and learn from those failures of 2025. But we're also going to start to see some more governance clarity over the features that are being used and really making sure that they're able to demonstrate a lot of that value rather than just having some of that theoretical efficiency ideas come in. So, and again, I think you're going to start to see a lot of those vendors and banks coming in and asking harder questions around who owns some of those failures or what's going to happen when these systems do come under stress and things like this happen. And how can we audit these from an end-to-end perspective? So I think, yeah, Treasury is really going to start to become that credibility layer almost between trade ambition and payment speeds and balance sheet risk and all of these. But you're going to start to see these teams really being able to deliver. The ones that matter are going to be the ones that are really able to deliver on these tangible outcomes rather than just the ones that are able to talk about what they want to achieve. So yeah, I think Treasury credibility really going to be one of those big themes that we're going to start seeing in 2026. What's your next prediction? What's your third one you think we're going to see next year?
I'm going to be more controversial, Carter. I'm going to talk about buy now, pay later, which is a quiet theme, but also a loud theme that we've been talking a lot about in 2025. I think buy now, pay later is going to move from innovation to a balance sheet risk. I think it's going to stop being treated as a convenient payment product to something that becomes priced, regulated, and governed as credit rates, which really impact liquidity and risk management go up or continue to be challenging. It's been quietly scaling throughout 2025. I think the market is predicted to reach $50-60 billion this year in 2025, and that's a 30.7% increase year on year. And it's predicted that by 2030, nearly 1 billion users will use buy now, pay later. So I guess we've really got to think about how sustainable this product is, what the real impacts are, how it's going to impact payments. And that's something we'll be here to report on and watch out for. It's very positive for treasurers. It does provide predictability in cash flow, working capital cycles, or aging receivables. But as payment cycles get extended, it helps suppliers finance buyers in direct ways. But there are some potential systemic risks, which we've identified at TTP, about creating a dependency on this product. And we've seen exactly the same thing on creating the challenges with creating dependencies on receivables financing that has caused frauds. It will be interesting to see what the industry does on buy now, pay later in 2026. Carter, over to you for the final prediction.
Final prediction. So again, going back to technology, as you said, my favorite topic to talk about, but I think we're going to start to see a lot more around the idea of digital rulemaking, especially in that AI space, as we start to see, like I talked about, some of those gaps coming up with the AI implementations going in. And I think really specifically, you're going to start to see Asia Pacific kind of become that center of gravity for some of this digital trade rulemaking. Of course, Europe right now is navigating some political friction on that side, and a lot of others struggling with perhaps alignment and implementation. But when we're seeing AI kind of increasingly improve efficiency in banks and across platforms, but still risking leaving behind some of those smaller businesses or countries in the developing world, I think you're going to start to see more and more people come in and try to put these rules in place to really guide that implementation, to make sure that you're bringing everybody up and not leaving everyone behind. Especially when you're talking about trade digitization, it's going to succeed or fail around that idea of distribution, right? It doesn't matter how sophisticated your technology is, how sophisticated your system is, if you can't get everyone on board, right? So again, making sure that you put these rules in place so that you have that critical mass of industry around the world, or whether it's different sectors within a given country, to make sure that everyone's able to be on board and have kind of those same experiences as the organizations that benefited on that side. When you start to talk about AI and digital trade, if that's only applied to the finance layer of a transaction, the friction in those transactions and whatnot, that's not just going to disappear. It's just going to be shifted to somewhere else in that ecosystem. So when you put those rules in place, which again, I think we're going to start to see more and more of going forward, you have those in place, you start to remove some of that friction and you get to genuinely benefit from the positive impacts that can come out of all of these technology systems coming into play. That's the prediction there, is that we're going to see more and more in terms of that digital rulemaking coming into play in the year ahead.
So that's our wrap on 2025. And I think it's clear that the year exposed frigidities in the system. I think we wouldn't publish our system error without lots of cause for concern. What I think we're seeing similar patterns across Treasury, payments, technology and trade. Often some of the tools that were created to ease some of the flows probably scaled faster than we expected. And there are now governance problems. There are verification challenges and controls that now need to keep up. And we've got to keep our eye on the space of private credit, supply chain finance, buy now, pay later, and artificial intelligence. And I think that the three pieces we need to keep thinking about are data, trust, and accountability. And I think that plays across trade, treasury, and payments. So that's a bit of our wrap here. We're just a few hours from celebrating the start of 2026 and looking at the key themes of 2025. Carter, one final question. What's your New Year's resolution?
Ooh, isn't that like one of those things where if you tell people it doesn't come true? I think for us, I'll give a bit of a TTP spin on it, but it's really getting out there and getting more and more expert insights on a lot of the work that we're putting out to make sure that what we're doing really is that high quality content that our readers expect, and that we're getting different perspectives and different views, and perhaps even some controversial views, right? We want to be able to make sure that what we're producing professionally has some value and sparks conversation on that side. So I think the New Year's resolution on that front is getting out there, finding those different perspectives, and really trying to find a way to bring those to light. What about you? Do you have a less professional New Year's resolution you want to talk about?
For me, sleep more. No, but in all seriousness, I guess for leaders with an endless to-do list, the continued hamster wheel for transaction banking, if we try and think about it from a leadership perspective, I'd say my ask for leaders is to be bold, challenge some of those age-old expectations, think about starting fresh and thinking about solutions that your customers want, that your customers love, and how you're going to continue driving innovations to meet that demanding, but rightly so, innovative customer. And finally, how can we build products that are open and inclusive? They improve and increase the development of emerging markets and ultimately make our industry better. Here's to a happy, healthy, prosperous 2026. Happy New Year.
Happy New Year.
And don't forget to follow Trade Treasury Payments
on your favorite podcast platform.
Thanks for listening.